Alright guys, welcome back to the channel. In this particular video, I want to cover double tops and double bottoms because they're a very popular and powerful strategy for an entry technique into high probability zones in the market that provide a high probability and a very high predictability pattern to be able to capture some profits, not long term, not shooting for the moon, but predict really high probability rollovers with a degree of certainty, or a little rally based on all of the little orders that are lurking as a cluster in a particular zone. And once they start to get triggered, then we see that rollover or we see that rally. And it's a very popular strategy. It's something I get asked about a lot. Some people can't believe the simplicity of these patterns, but I'm telling you, I've been around many successful traders. I work with seven-figure traders on Wall Street prop firms. I've worked with prop firms in London. I've been around some wildly successful traders that trade large capital, and they trade these double tops, double bottoms. And they are very simple, and I want to explain kind of what we look at when we look at double tops and double bottoms. And I'm going to give you an example of one that's kind of already played out, so I can show you that in hindsight. And then I'm going to show you one that's on the radar right now, and in the next 15 minutes or 20 minutes or so, there's a potential entry on that setup. And one is on a bearish opportunity and one's on a bullish opportunity, and I'll show you the difference between the two. So the first thing I'm going to show you is the euro yen. So in front of you here, you can see the euro yen. And by the way, if you get value from this channel, please hit the subscribe button, hit the like on this video, and also hit the notification bell so that you get updated with notifications when new videos come out. We're about to release a lot more of these videos, and also I've got a show coming which is going to be extremely valuable for you guys who are into wealth creation, not just trading, but the entire, investing, stocks, speculation, business growth, all that kind of stuff. We're going to be talking about that on the show. So give it a thumbs up, give it a little, give the notification bell a little ring, and subscribe to the channel if you're not already. So this is a euro yen setup, okay, and this is going to be the double top. Now this is the hindsight trade, so it's already played out, but I'll walk you through the kind of process of analysis to identify that this might be a really nice high probability zone, okay. So you can see here that just recently, I'm not going to zoom out, too far here because I don't need to, but you can see just recently here we tested 126.35. Just above that, well, 126.5 is a psychological number in this market. It's very well respected, and you can see that just by looking at 126.5. You can see we just had this recent retest here where price action pushed up. We got rejected, we put in this V shape, we tested again. As we tested again, we had that bearish rejection. We had a little pin bar here, if you want to call it a pin bar, a rejection candle, and then we rolled over to the downside. We had some divergence on the RSI, and then we rolled over. We went into a period of consolidation for quite some time, basically the rest of the year from late August, and then recently we've approached that zone again, and as we've approached that zone, we've had this strong bullish move. We've been bullish 1, 2, 3, 4, 5, 6, 7, 8, 9 days, 9 trading days in a row. And what that's done is hit a wall just as we've hit this previous zone. So if we draw on our kill zone here, if you like, and I normally go from the highest high to the highest close as a start, and then I narrow that down based on confirmation and confluence and different entry criteria that might meet my trade plan playbook. But as we've approached that zone, you can see we've hit that like a brick wall. Now, structure leaves clues, okay? We look left, we see we've got previous resistance at that level. If you zoom out even further, you're going to see that this level's respected more often than not. meaning that when it's tested, it usually bounces off of that level that more than it breaks through straight away. So we can expect to hold. So if we go down to the trading time frame, which for me would be the first trading time frame would be the 4 hour. And again, you can see, look, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 bullish candles in a row. And then we hit that like a brick wall, and then we form this double top. Now, there's going to be rules that you need in place to determine what you consider a valid double top, because if you don't have rules, then you'll start to think, oh, sometimes I'll trade it like that, sometimes I won't. That's not going to bode well for you over time. That's just still gambling. There's no consistent plan, no consistent approach, and you're going to struggle to break even over time. You might have a big win, you might have a big loss, and over time you're going to either lose money or break even at best. So we want to have rules, and here's some of the rules that you might take into consideration. RSI, going overbought. Now, lots of people say to me, you can't have RSI going overbought in currencies when Forex, it doesn't make sense. It does. You can have that as a rule. And many traders I know, for instance, in an institution, I know an institutional trader who looks for, when he's looking for trending trades, for instance, he'll wait for the pullback, wait for RSI to go oversold, and then as soon as RSI goes above 30, they enter. There's no other entry signal than that. And that's an institutional trader trading Forex. I know a prop firm trader trading Forex who trades RSI overbought and oversold, purely that, between 20 and 80. And I know traders who use this very, very effectively. So before you start going RSI in Forex, check the link below. It'll take you to Investopedia, and you can learn about how you can use RSI in Forex. So without going off on a tangent on that, RSI overbought, and then you can see that price action has put in equal highs here, okay? But the RSI is showing bearish divergence. So look down on the RSI, you can see we went overbought and then we put in bearish divergence. So although we've got time symmetry and price symmetry on the double top, and the double top hasn't spiked up too high, which is great for stop loss positioning, we're good to go. We've got a really nice high probability setup on our hands. Now, the way that I place targets, depending on the double top, will be at structure on the higher time frame. So look, I'll be looking at structure targets just above this previous structure resistance zone, which means that depending on where your stop loss goes, you can get a nice reward to risk profile here. So the way that some people enter this, some people will use the double top as structure in itself. So they'll go, I'll get an ATR base stop above the high, okay, the highest high of the double top. What I like to do is I have a rule where as long as I can get a 1-to-1 to my target, and as long as I'm not above my maximum allowable risk on any one trade, because I trade a fixed position size on this particular setup, on this particular account. If you're trading a percentage-based risk, it doesn't matter as much. But if you're fixed position size and you're doing a smooth ratio money management strategy or something like that, it's going to be fixed position size. You're going to have a maximum risk limit. So as long as you're not above that, and as long as you're not, the reward to risk profile isn't skewed, what you might bear in mind is, instead of going an ATR above the high here, because the entries on this would be at 126.48. 126.48 at the close of this candle here. You might use an ATR, but then you might say, well, look, my reward is going to be down at this structure level here. So I'll just color this in green to make it nice and clear. And if this is my reward to risk profile, what I might do is just get my stops above the previous major structure high, which will get us above this high on the daily, few pips above that high, and you're still getting a good reward to risk. And as long as you're not out under your maximum allowable risk limit, then this is a really nice setup. So you could still be in this. Now, this trade's already played out, and some of you guys just take profits at the low. Some of you more conservative target takers have already taken profits out of this, and you're out of the trade. This is a hindsight trade. I'm showing you the thought process that goes into this. But if you're in this, target taking, you might split your targets in two. You might have taken some half of your position off the table and you might be trailing stops or rolled stops to break even or what have you, depending on how you manage the trade, right? But this is how I would handle this particular trade. The other setup that I want to show you is in the opposite direction. So now you've kind of got an overview of what I would look at there. Let's apply that to the dollar CAD, which is in the opposite direction. This is a bullish situation. Okay, so remember, double tops, double bottoms are a counter move. We're not looking for them as trend trades. We're looking at counter moves. So the first thing I'm going to do here when I look at the dollar CAD is I'm going to bring on a horizontal line, and where we're trading right now at 27.71, I'm just going to ping a horizontal line right there. And on a bird's eye view on the daily time frame, I'm just going to zoom out and take a look at how price reacts at that level. Now, just going back to 2015, I think you can agree that there are some really nice structure holds at that level, right? We've got resistance. Okay, it then became support as we break above it. We pushed down, it became support. We then had support here. It then became resistance again, support, and then we're testing that level again. So there's about 8 to 10 tests of that level where it's held in the past. So the odds are in our favor already, okay? So now, just with this most recent low as well, which is significant, we're testing that zone. So the next thing we want to do is see how we can get involved. Now, before we go down to the trading time frame, another thing to mention is similarly, we've got the 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16 bearish. We've been bearish 16 days in a row, trading days. And as we've approached that zone, we've hit it like a wall, and look at this. Beautiful time symmetry, price symmetry, double bottom. We haven't closed below the low of the initial test. That's very important. If we close above the high or the low of a double top or double bottom on the second test, that invalidates the whole setup. So what we're doing is we're waiting for the close of this candle to dictate whether or not this is valid or not and whether we can enter or not. Because if we close below the initial test, we've got a high probability of a continuation down. If we close above the initial test low, we've got a high probability of a little rally here. So other things that we can do whilst we're being patient and waiting for that to close is analyze further confirmation. And just looking at this on RSI, we've gone oversold. Okay, oversold down here. We've got divergence. We've got equal tests of the low at the moment. Okay, and as long as we close above 127.72, we've got divergence. We've got a nice setup. We've got bullish divergence on the RSI. We've got equal tests of price action. And now it's just a case of being patient and waiting. Now, if you drop down to the hourly, you might actually be able to take this on the hourly time frame in 4 minutes at the time of this recording. It's now 9:56 a.m. in London on the 8th of December 2020. If you're watching this video in the future, you can go back and look at the chart, what happened. But this is still respecting this level. So if we're respecting this level on the hourly as well, that's a real powerful confirmation in my opinion. And that will provide a really decent trading opportunity. Now, that begs the question, where would targets be? And for me, targets on this would be, again, just below that structure zone. So we're going to just draw this on right here. This is going to provide a nice little bounce, a nice area for potential targets. And again, great reward to risk profile on this setup here. Depending on what the ATR is on the close of this candle, I'll be adjusting that for stops. It'll be an ATR below the low and then targets at the high, which gives us a really great reward to risk profile trade. So when you can catch these, I don't trade these a lot, but when they do set up at certain discretionary levels and certain price levels that I am allowed to take them at, normally extreme highs and lows, a major structure, they provide a real high probability setup and really great reward to risk profiles. So That's what I'm looking at. Other than that, there's lots of consolidation in some of the other pairs this week, lots of advanced patterns, ratio patterns and things like that. The only other setup that we were looking at last week, which we caught, if I just remove these drawing tools here, was the New Zealand dollar. This was a level that was being tested looking left. Again, a nice bullish run. And then we had this retest. We had the pin bar. And then we had a lower low, lower close here. And then we saw the rollover. But I'm not going to go through that in this video. Hopefully you got value from the double top, double bottom explanation. If you've got any questions, let me know. Let me know how you trade them. Let me know what you think about RSI. Let me know what you think about other filters that you might use for your double tops and double bottoms. And if you're interested in seeing us analyze these markets on a daily basis, you can come and join us in the live trading room as well. All the links in the description. And until next time, guys, have a great rest of your day, and I'll see you then.